Something happened at Bitcoin 2026 that changed XRP's institutional story forever, and the people in that room completely missed it. Not because they weren't smart enough, not because the information wasn't there, because the noise was so loud, so calculated, so perfectly timed that the most significant regulatory development in XRP's 14-year history filed quietly in the background while thousands of institutional eyes were locked on the stage. Here is the question nobody in that room stopped to ask. Why would a family with direct access to the most powerful financial regulators on the planet be quietly accumulating XRP at a Bitcoin conference on the exact same day that XRP filed for a Federal Reserve master account? That is not a coincidence. That is a pattern. And today, we read it precisely. Welcome back. I'm Plan XRP Admin. What I do on this channel is not guess. I do not speculate. I take the documented statements, the verified regulatory filings, and the structural deployment data, and I read them precisely for what they actually mean for XRP's institutional timeline. Today, we are going deep. No hype, no tribal framing, just the structural picture that the mainstream coverage is still not putting together. Let me start with the hard truth. Most people watching crypto coverage right now are staring at price charts and conference highlights. They are measuring sentiment. They are watching which executive is on which stage. And while they are doing that, the actual architecture of the next financial system is being quietly filed, registered, and deployed in documents that most retail investors will never read. Here is what you need to understand about the Federal Reserve Master Account, because this is not being explained with the depth it deserves. The Federal Reserve has existed for 113 years. In those 113 years, there has been exactly one class of institution that held a master account, a federally chartered bank. That is it. No fintech, no crypto firm, no payment processor, just chartered banks, sitting at the center of every dollar-denominated transaction that flows through the United States financial system. A Federal Reserve Master Account is not a partnership agreement. It is not a pilot program or a memorandum of understanding. It is direct access to the infrastructure that processes the trillions of dollars that move through the U.S. interbank system every single day. Now here is what changes everything. The PACE Act, which the current administration has supported, creates a legal pathway, specifically called a skinny master account, for non-bank entities that hold the appropriate license to access Federal Reserve payment services directly. Ripple's application for a national trust bank charter through the OCC, combined with the PACE Act framework and the Federal Reserve Master Account application, creates a three-layer regulatory integration that makes Ripple not just a partner to the U.S. banking system, but a direct participant in its core infrastructure. Think about what that means structurally. The XRP ledger currently processes between 1 and 3 million transactions daily. The Federal Reserve's payment systems process trillions of dollars in transactions. Direct Fed access would expose the XRP ledger to institutional payment volumes it has never seen, not because more retail investors are buying, but because the payment infrastructure of the United States is now connected to it as a direct participant. Brad Garlinghouse said it plainly. Nobody wants XRP to win more than Ripple does. The Federal Reserve Master Account application is the most concrete evidence that Ripple is not waiting for the system to come to them. They are integrating into the center of it. Let's do the math that the crowd is ignoring. There is approximately $27 trillion locked in Nostro and Vostro accounts right now. These are the pre-funded buffers that correspondent banks maintain in foreign currencies so that cross-border transactions can clear in time. That $27 trillion is not earning yield. It is not working. It is sitting idle as a liquidity tax on the global banking system. Every dollar of that $27 trillion that flows through a real-time XRP settlement corridor is a dollar that no longer needs to sit frozen in a pre-funded account. That is the utility. That is the function. And that is why 13,000 banks are being integrated into the ZBEC network for XRP-powered treasury operations. Now let's run the supply side of that math. XRP has a fixed total supply of 100 billion tokens. Of the approximately 55 to 57 billion currently in circulation, a meaningful portion sits in long-term institutional positions, Ripple's own escrow, and exchange reserves that on-chain data shows are at multi-year lows. The liquid float, the actual supply available to move through institutional settlement corridors, is a fraction of what most retail calculators assume. Here is what that means in practice. If XRP is being used to bridge even a conservative 1% of global cross-border payment flow, and the cross-border market moves $150 trillion annually, you are talking about $1.5 trillion in annual settlement volume flowing through a liquid supply that is structurally insufficient at current prices to process that volume without significant price appreciation. This is not a prediction. It is a requirement. The mathematics of liquidity efficiency are not a moonboy fantasy. They are a design specification. Higher XRP price means fewer tokens needed per transaction, lower slippage, and a more efficient bridge currency at institutional scale. The institutions writing the settlement infrastructure understand this. That is why they are building before the price reflects what the infrastructure implies. Think about that math one more time. $150 trillion annually. $27 trillion locked in Nostro accounts, 55 billion tokens in circulation with exchange reserves at multi-year lows. If you have a problem with those numbers, you don't have a problem with me. You have a problem with the laws of finance. While retail investors were watching the Bitcoin 2026 stage, the institutional signal was building in a completely different direction. Eric Trump's speech was covered extensively. Every headline focused on Bitcoin. Jamie Dimon's reversal, Charles Schwab's 30 million accounts going into Bitcoin custody, BlackRock's ETF dominance, the US government's 300,000 Bitcoin reserve. That is the story most people will remember from that conference. But ask yourself this brutal question. Eric Trump is not a retail investor sharing a Robinhood screenshot. He is an executive of the Trump Organization, the family business of the sitting president of the United States. When that person stands at the largest Bitcoin-specific event in the world, surrounded by Bitcoin maximalists, Bitcoin ETF managers, and Bitcoin mining executives, and chooses to disclose that the Trump Organization holds XRP inside their ETF and is accumulating, that disclosure was not accidental. It was deliberate. It was made at a Bitcoin conference for an institutional audience that was not expecting it. It was made on the same day that XRP's Federal Reserve Master Account application entered public record, and it was made using the same framing he used for Bitcoin: accumulating, not selling. Now stack what you know. Ripple acquired Hidden Road, one of the largest prime brokers for institutional crypto, and G Treasury, a core platform for corporate treasury management. These are not product launches, they are infrastructure acquisitions that position Ripple directly inside the operational workflows of institutional finance. The Zebec network integration is deploying XRP into the treasury operations of 13,000 banks. That is nearly 3 times the total number of federally insured banks in the United States. This is not a pilot. This is a deployment. The regulatory environment, the Clarity Act, the Pro-Digital Asset SEC under Paul Atkins, the PACE Act Federal Reserve Access Framework, is being built by an administration whose family has a direct disclosed financial interest in XRP's institutional success. Smart money does not build a position and then build the regulatory framework and then build the settlement infrastructure by accident. They position, then they build. Then the price reflects the structure. Let me give you the specific sequence to watch. First, the OCC National Trust Bank Charter. Ripple's application is active. When that charter is granted, Ripple becomes a federally supervised financial institution, not a crypto company, a bank. That reclassification changes how every institutional compliance officer, every asset manager, and every sovereign wealth fund can legally interact with Ripple's infrastructure. Second, the Federal Reserve Master Account decision. Once the charter clears, the master account application moves into review. That is the moment XRP Ledger goes from being a partner of the Fed system to a direct participant in it. That is the event that triggers the transaction volume expansion I described in the math section. Third, the Zebek 13,000 bank treasury deployment reaching critical mass. When a meaningful percentage of those 13,000 integrations go live, XRP's utility demand is no longer theoretical. It is measurable, on-chain, and visible to every institutional analyst who is watching. These three catalysts are not separate stories. They are sequential stages of the same integration. Each one expands the institutional infrastructure that XRP settles. Each one tightens the available liquid supply. Each one validates the thesis that the Trump Organization, quietly and without a stage, is already positioned for. The fuse is lit. The countdown is not measured in weeks. It is measured in filings. And the filings are moving. Here is what the exchange reserve data is telling anyone who is actually looking. XRP exchange reserves have been declining steadily. On-chain forensic data from CryptoQuant and Glassnode shows that the tokens sitting on liquid exchanges are at levels not seen in years. When institutions accumulate, they do not leave assets on exchanges. They move them to custody. Off the books. Off the float. The Trump Organization is accumulating and not selling. Ripple's escrow locks 800 million to 900 million tokens back into escrow each month after release. The institutional positions being built ahead of Federal Reserve Master Account approval are not being advertised. The window between when infrastructure is being built and when it is fully priced is historically short. By the time the mainstream headlines catch up to what the regulatory filings and the treasury deployments are already saying, the accumulation phase will be closed. The crowd is watching the stage. The institutions are watching the filings. Those are two completely different games, and they do not end at the same price. Let me bring this together precisely. Eric Trump stood at Bitcoin 2026, the biggest stage in crypto, and confirmed the Trump Organization holds XRP and is accumulating. He did it at a Bitcoin conference for an institutional audience that was not expecting it, using the same conviction framing he applied to Bitcoin itself. While he was speaking, XRP filed for a Federal Reserve Master Account, direct access to the central banking infrastructure of the United States, a class of access that has belonged exclusively to chartered banks for 113 years. The Zebek network is deploying XRP into the treasury operations of 13,000 banks. Ripple has acquired the prime brokerage and treasury infrastructure to sit inside institutional finance's operational core, and the regulatory framework being built by the administration, whose family is positioned in XRP, is advancing on every front simultaneously. Bitcoin is becoming the digital gold, the store of value that institutions hold and governments reserve. That thesis is sound, and Eric Trump made it well, but XRP is becoming the rails, the settlement layer, the correspondent banking infrastructure of the new financial system. One is what you hold, the other is what everything flows through. The question is whether you understand the difference before the filings become headlines. Comment Rails below if you made it to the end, and if this kind of structural analysis is what you're here for, subscribe. We do not chase noise on this channel. We read the structure. Stay patient, stay rational. I am Plan XRP admin, and the math doesn't lie.